Alright guys, welcome back. This is MFX ChartKings episode 2. Today we're going to be going over a quick analysis of GBP CAD. Now, I don't really trade this pair too much. It's just that when I did go onto the chart, I managed to spot a few things that I think if I explain to you guys would give you a really good help in your trading. And if you was to start implementing this stuff as well, you'll definitely see some improvement. So if we have a look, all I've got marked on the chart at the moment is pretty much this price reversal zone that we've got in the red. You can see every single time the market approached it, we had a reversal. One here, and then from the upside we have one here, we have one here as well. So it would make sense that if the market's going to continue to go down, this is probably going to be the area where it would be reversing off. That's why I've got that arrow there. But what I'm more interested in right now, because I'm not trying to predict, what's going to happen here. I'm interested in what's going on right now. So if we have a look at this area that I've just highlighted for you, that's pretty much where the market did something called a pullback, where it was in an overall trend of going down, but it did something called a retracement, just taking a breather. So now it's pulled back now into this area. That's where we've found something called resistance, where the market has dropped again. But now what our question is that is the market going to continue to go up from this point, or is it going to continue to go down to the red point? The way that we'd find out is just by having a look at the way the market dropped on its way down, and we can find certain patterns. So the best way I can describe that is we have something called a bearish flag. Everyone in the MFX trader transformation course would be aware of this as well. It's one of the continuation patterns that we trade. Just give me a second. So you can see the market has dropped from this point, this area just below 1.85,000, just below here. The market has dropped significantly. I've done that with that arrow. Then we've had a retracement that was coming down to drop again. What's interesting about the peak of this retracement on this bearish flag is, or you could call it a wedge, to be fair, either one, is that it's also a Fibonacci level. So everyone that's again in the course, I do teach the Fibonacci, so it's pretty much how to measure a pullback. You just go from the lower, the lower high down to the lower low. You drag it across, and now if we have a look at, I believe it might be 50%, you can see that the market has pulled back up to the 50% retracement pretty accurately. You can see that if I just zoom in, right here, the market touched the 50%. That's where this area was acted as resistance, meaning that the market dropped from this point. Then we had a break of the consolidation zone, which was the flag, and now it would make sense for us to see like a continuation down to the downside. The other thing that would give me that indication, if you look, this is on the daily chart as well, so these candlesticks are very powerful. If we have a look at when it dropped, we had something here called a Marubozu candle. I don't know if I'm pronouncing that right, I hope I am, but it just means that it's a very, very, very aggressive bearish candlestick. So we had that, and then the other candlestick as well. You can see that we had a large rejection to the upside, so the market went all the way up, but it couldn't handle being up there. The sellers then came in strong and pushed the market all the way back down. So that's, in my eyes, a bearish signal. And then the other thing that we have is pretty much 3 days of a consolidation on the lower time frames, but on the higher time frames they just look like dojis or spinning tops, and it just represents indecision that the market hasn't really made up its mind. So hopefully what we see tomorrow, or today you could call it, will pretty much give us a good indication of what the market's going to do next. Hopefully our analysis plays out and it goes down to the downside. If it doesn't, that's fine. As it just starts to move up, we'll wait for some setups to go long as well. Remember, this is just my bias, but anything can happen in the market, so my goal is just to watch it and then trade what it presents me. But hopefully this helps. This is just the idea of using Fibonacci in confluence with other patterns and other formations, and then these should really help you in the market as well, because you're putting more things together that's going to get you that accurate trade. So yeah, until next time guys, hopefully this helps, and I'll speak to you soon.